art of trading is arbitrage. That is actually the fundamental definition of trading. Buying an asset at a lower price and arbitraging the price to a higher price. Like, that's why I use that word so much. But I think it's a very important word to learn, like, and use everywhere. You know, like, if I can get, you know, I mean, you could use that word on anything in life. It's like, well, I could go out every single morning and buy a cup of coffee from a cafe that costs $5. Or I can go to Aldi and buy 16 pods for an espresso maker and make 16 cups of coffee. And I just created an arbitrage of 16 cups of coffee for the same price. You can do it with anything. If you did that with everything in life, you have a lot more money in your bank account at the end of the year, I tell you.
That's a good analogy. I like that.
Yeah. You do it with anything. Name me anything.
Go off on a side tangent with me.
Yeah.
How good is Aldi? Like a supermarket that comes in and runs targeted promotions for 2 days on snow gear when they know that schools are taking their trips to the snow.
Yeah, they're clever.
It's genius, right?
Yeah, well, think
Meeting
about...
the market where they are.
Think about how many... we should get the stats on that. But between you got Coles... No, not Coles. You got Wesfarmers and Woolworths, right? Mm-hmm. Two big conglomerates. I know for a fact that I think they have 90% of the market share, right, of whatever that industry is called.
I'm going to Google this while we're talking.
And then the rest make up the other 10%. But I think when I knew that stat was just before Aldi happened. So this is back in finance school.
Okay.
So there's a chance that 90% has gone down like 80%. Aldi's taken like 15%. And the other 5% would be IGA and you know, your independents. But I remember studying that back at business school. There was just two companies in Australia that ran like 90% of market share. And they're like, it's so, you know, like they'd have to make some seriously huge mistakes to let someone else in. And look at that. How did I get that right?
You're just arsey.
13.2%.
13.2%.
I said 15%.
Yep.
And when I was calculating that back in business school, they would have been nothing. Like, I don't even think they really existed at that stage. And so that 13.2% used to belong to Coles and Woolworths. And what are they at? 35% each now.
Yep.
So that's 70%. So they lost, you know, they were up at about 85% at some point. IGA and other supermarkets. I feel like they were a bit lower. So even those have gone up a little bit.
We're using Google, of course, and we're on businessinsider.com.au.
Business Insider, that's legit. Well,
that's why I felt happy, Chloe.
Yeah, I'll believe that. Yeah. Well, okay, that was interesting.
That was really cool. I'm not going red or black. I'm in property. I know I need to diversify. I'm getting older. I've only got supposedly 23 years left of my work.
Do you have a stock portfolio?
No.
Okay.
Want to know why?
Why?
Same reason I never had SEO.
What?
Just didn't know who the fuck to trust.
I don't trust.
And I didn't have the time. Sorry.
Yeah.
It's an excuse, so I appreciate it. But I didn't put in the time to then go and have a look. Like, my brother-in-law is heavily in the stock market, and I trust him. I've always said, hey, Stephen, how do I get in the stock market? You know what he said to me? He goes, you go and do a one-day course at the stock exchange so you fucking understand what it is you're about to undertake.
Yeah.
And then we'll talk. Now, how smart is my brother-in-law? He didn't just sit there and vomit off his top 10 stock picks and blah, blah. He said, you know what? Go and do the damn work first. Go and do your homework, exactly what you're saying. Yep. Learn what it is and then get into it. But how many people want the shortcut? They want to take the shortcut to success all the time. They don't want to do the damn work and they end up losing a lot of money and then they cry about it on a current affair. So,
yep. I'll give everybody a super big shortcut and insider trading tips. Everyone ready?
Are you ready?
You're waiting for that those top 10 tips from Jackson Dean, ex-hedge fund trader, international hedge fund trader. He
wasn't delisted, by the way. He just stopped trading.
No, I wasn't. I still trade.
I was going to ask you about that.
Here's my tip. If you are definitely going to trade, right?
Because I think I should be trading, right?
Okay. First of all, there's a difference between trading and investing. Okay, trading is different. Trading is like, 18-hour-a-day sport.
Yeah, I've had friends that trade and they're antisocial. Like,
yeah, it's
they'll
crazy.
Stand up in the middle of a coffee meeting and I've got to go get a trade put on because my futures currency thing's gone down.
Crazy. So don't become a trader unless you are going to become a trader. That is my first big tip. That's just a side tip to my good tip. My really good tip is invest in tech stocks. If you believe in the way the world is progressing and moving forward, think about the next 10 years and what will be more valuable in 10 years than it is today. It always used to be property. Everyone would quote that and say, every 7 years, your property is going to double, which is just garbage. Like, that hasn't happened in like 2-3 decades now. But at a point in time, that was 100% true. And properties will, for the most part, I guess you could say they'll naturally go up because there's more people, more population, more houses, right? But that only is going to happen in certain areas because certain cities will just become more densely populated. However, if you just look at shares and things that have a very high probability of going up, what industry has the chance of going up the most? And I would bet on those industries. If you're going to place a trade and invest over, say, a 10-year horizon, you would invest in industries that you believe in that are going to progress and become bigger and bigger and more profitable. And for me, that would be tech stocks, artificial intelligence, virtual reality, all these things that are going to completely affect the way that humans act and interact with each other. These are industries that you should look at. Don't look at automobiles, don't look at blue chip stocks. They don't really exist, right? Like, there's no, you're looking at Woolworths and Wesfarmers and all these shares that like have gone down in market share. You know that 94% of the Fortune 500 companies have lost market share in the last decade. Isn't that insane? 94% or some stupid number like that. Like, they're considered the best companies in the world, like General Motors, Walmart. All these massive companies have all been massively disrupted. And they've all been disrupted by tech and technology, right? Technology is what is disrupting everything. So if you want to start your research somewhere, if you don't know what, to invest in, look for tech stocks. And tech stocks are on the NASDAQ in America. So whatever shares are listed on the NASDAQ are probably worth investigating. You start looking into their management teams. You look at their fundamentals of the company, of how stable the company is, and you make your own judgment calls from there. You can do some research. You can listen to some gurus and some mentors and all that sort of stuff. But unless those gurus and mentors are talking about tech stocks, they're probably not a guru and they're probably not a very good mentor, because those are they're not sure bets. They're still highly risky types of investments. But if you diversify across a number of different tech stocks, there's a very high chance you're going to be picking some big winners over the next 10 years. Look at what the price of Google was 10 years ago. Look at the price of Amazon 10 years ago. Look at the price of Facebook 10 years ago. Look at the price of Spotify, a few years ago, this year when it listed. Like, look at all these stocks that are in this sector. And they are on parabolic graphs higher. And, something big has to happen for them to fall in value. Yes, even if we go through an economic crisis, I just don't believe that that's going to affect the fundamental usefulness of technology. And if the technology companies are run correctly or by very smart people, there's a very high chance that they hire more smart people. They build better technology. They build better IP, and it just gets better and better because they're in a growing industry. They're in a growing sector. So that is my big giveaway tip when it comes to trading shares and being in the market, is invest in industries that have a very profitable outlook over the next 10 years. And a great place to start is technology.
You heard it here first, folks.
You did. Wait till you hear that call 10 years from now.
Well, I'm actually just dialing my stockbroker while you were talking.
Oh, yeah? I can find your stockbroker.
Now, I was just Googling again. I Google a lot. And Spotify, which is very you touched on it, is we're very heavily used in my household.
Yep.
I'm not. I'm on Apple Music. I'm the odd one out in my house. And if you look at it, even obviously you said that floated, but in the last year, you know, a low of 130, it's got a high of about a 180.
Spotify is not a good example.
No,
Spotify is one of those very early stages.
I actually think it is a good example because...
Oh, I invest in Spotify. I'm just saying.
The technology hasn't settled, right?
Oh, and it's only just gotten started.
It's in its infancy. So, but already you've got, what, a 177, this is US, a share.
It's gone up 30%, 40%.
With a market cap of 31 billion.
That Spotify stock could be at 1,500 in the next 5 years. Like, their management team are friggin' smart. Like, okay, technology includes Uber, by the way, you know? Like, you got all these tech stocks. If you believe in those ideas, yeah, they've already had their run, like their huge, you know, initial run. But that's where you have more risk and that's where you have more returns. So if you invested in Amazon, you know, 6-7 years ago, it's high risk because you had no idea what was about to happen. But I don't know what Amazon's gone up, but it's probably gone up like, I think, 2,000% or something. Facebook is quite similar. Google, Microsoft, Apple, all these tech companies. They're the
Amazon's a good read too, by the way. If you're looking for a book, it's a great book.
Amazon?
Yeah, the making of Amazon.
Oh, yeah.
I read that on my last holiday in Thailand in December. It was fantastic.
Yeah, well, Jeff Bezos, you know, if you're betting on... I think when it comes to investing, you really are investing in management teams and mission statements and why values. If you want to round it all the way back to the beginning of this episode, my why is impressive, you could say. You know, go and find a company that's got an impressive why statement. Why do these guys do what they do? You know, why are they creating these disruptive companies? What's the 10-year mission, you know? And if you believe in that...
I'm listening to what you're saying. I'm just sitting here in shock because I know Amazon's huge, right? Yeah. I'm not an idiot.
You didn't know how big.
$1,739 a share.
Yeah.
And since, October 2017, it's grown from $1,000 a share. And it's closing out at about just under $1,800 a share in 12 months. So it's grown $800 on 1,000.
Yep. 80%.
That's amazing. And if you look at the 5-year trending... Geez, you'd be laughing at 2014.
Yeah.
Wow.
But you'll look back on 2018 and be laughing now when it's 2025.
Says that. Everyone goes, there's no better time to get in than now. Like, the time to buy is now.
Only for certain things. And, you know, there's definitely no guarantees about the share market. I mean, even right now, it's quite scary, like how unstable the share market is this year compared to last year. And it's about to get very difficult to trade the share market as a whole, I think, over the next 5 years. But the tech sector isn't necessarily correlated to the whole overall share market. There would be numerical correlations that you could look up on how correlated the tech sector is to the actual, you know, Dow Jones or New York Stock Exchange. And I would be confident and bet that it's definitely not as correlated as nearly all other sectors, because the tech sector is really listed on the NASDAQ, and the NASDAQ is its own exchange. And you can see back in the tech crisis, and that's another thing that you can always consider, that the tech crisis back in 2001, well, I mean, the Bitcoin bubble behaved exactly the same as the 2001 tech crisis, and I called the exact top of Bitcoin. You know that?
Did you?
To the day. I was so lucky. I said to I was at a party with about 10 different mates debating and yelling and screaming at me that they're going to be like the next millionaires from Bitcoin. And I said, if you guys are saying that, like, no offense, it's time to get out. Like, that's the warning sign. Like, and that was the day that Bitcoin was at 25,600 Australian dollars or something.
Yeah.
And I said, if it's not the top now, it's going to be the top sometime within the next 6 weeks. All right. It cannot go up longer than 6 weeks. So yeah, you might be able to ride this run for another few weeks, but it's not going to, it's not going to happen for more than 6 weeks. It's going to burst. Like, this bubble is driven 100% off media momentum. which is when you know it's a bubble. And
which shows the gullibility of the consumer, right?
Well, yeah, I mean, it's not even the gullibility.
It's exploiting. It's arbitrage.
This Bitcoin thing's not going away. Like the idea of it, like, you know, blockchain technology and cryptocurrencies and the technology, I'm saying like these words because there's huge clues here in making a lot of money over the next 10 years. The technology behind Bitcoin, which is blockchain, that technology, you want to go and make $1 million out of investing, there's a very high chance you're going to be able to do that if you're well researched in blockchain. All right. If you are interested in blockchain technology and how that works when it comes to triple entry accounting systems, legal contracts and the way that they're going to work in the future, medical records, how they're going to work in the future, pretty much anything you can think of, there's a blockchain solution for it. And right now we're in the era of, you know, very early stage startups in blockchain, which are called ICOs or initial coin offerings. It's a very dangerous time to get into anything right now, but you're literally seeing the same thing that happened after the 2001 tech crisis. There was this huge bubble back in 2001 around the internet. And that didn't mean that the internet was invalid because the whole tech, you know, sector crashed. It went up like stupid amounts. Like it went up over 20 times and then it fell by like 18 times, so it came back down to where it was. But then if you look at it over the next, 10 to 15 years since, the tech sector, even though it went through that blip, that initial bubble that burst, it eventually started to progress towards its true intrinsic value. And that's where we are now today. We're in the current state of the internet, which is significantly higher than it was in 2001 when it burst in that bubble. There's a very high chance for seeing the same thing with Bitcoin and blockchain. And it might not be Bitcoin. It might be a different, cryptocurrency we haven't heard of yet. That'll be the gold standard of Bitcoin.
Bitcoin, triple M.
You could name anything right now. Anything. But no one knows, for the next 10 years. But if you're well researched and you are interested, you cannot go wrong with blockchain. Like blockchain will be the way our world runs 10 to 20 years from now. Everything will be done that way. Transactions, like currencies.
You're talking of decentralization of power, essentially.
No, I'm not even talking about that. I mean, that's the idealist, that's the uprising movement of Bitcoin, but it's not really what's going to happen.
But money is power, right?
Yeah, basically all blockchain does is removes the middlemen, right? So
what I'm getting at is money is power if you accept that point.
Yeah.
So centralized banks basically control a lot of what goes on in a country through their levers and manipulation of the country they're supposed to be safeguarding. So if you then take that out into blockchain technology, would that not then suggest that it does become a decentralized world order that we're looking at?
Well,
the very few have the very most.
Yeah, well, there's different...
It's not going to change instantly, right?
It's not going to change instantly. That's exactly what I was about to say. Like, you got versions of this coming out. So version 1 of Bitcoin is now out. People can see what the version 1 looks like, right? And some people would argue, oh, no, version 1 was out in like 2013 and people have been using it. But no one uses Bitcoin yet, right? Like 1%, I think it's like 1% of Bitcoin transactions are actually used for the purpose of Bitcoin. 99% of the transaction in Bitcoin happen from a transfer of currency from fiat currency, which is US dollars or Australian dollars, to Bitcoin and then vice versa and stuff. So the actual purpose of Bitcoin is not being fulfilled yet. Like it's just not a useful asset yet. It doesn't actually save you time. It doesn't save you transaction costs. It's not very helpful yet. But the idea of it, the technology is 100% the best thing that'll happen to us over the next 20 years when people get it. But it's not going to be a big thing until people or the powers that be or you could say governments or banks or corporates or whatever. It's not going to be big until they figure out how to relate the idea of blockchain technology or cryptocurrencies to the average individual. It's too complex. Nothing at a mass market level can be complex for it to have mass market take up.
You want to know why? Confused minds don't buy.
Exactly. And confused minds don't use either. If you're confused, you're not going to do it.
No.
So it has to be super simple. And when they figure that out, which is easily figurable out, but once they figure that out and make it something where, it's like a credit card, for example. If the average consumer needed to know how the magnetic strip on a credit card worked and like how that actually processes money and how that assigns your personalized ID to your personalized bank and then it transfers that money from there. I'm
smiling because I was around when these came out. I was part of that cash to FPOS thing.
Yeah. and if you had to intuitively understand the complexity of what is going on there behind the scenes, which is what everyone is trying to figure out right now when it comes to blockchain and cryptocurrencies. Everyone's trying to figure out the nuances and how it all works. Once that's gone and it's just a thing, it's just like, there's your card, use it, and you're going to be able to put that card into that ATM and that works. And the average consumer is going to be able to go, well, that actually makes sense. And there won't be cards. It'll just be on your phone, because we have payless cash already. We can tap and go with our phones. You're going to have a Bitcoin or a cryptocurrency account on your phone that has some sort of a numerical balance, and you don't care how it works. All you need to know is that you can pay for that thing with your phone if you tap it on that thing, and then you can receive the good or the service in exchange for that cryptocurrency and legally walk away with that product and service without it being considered stealing, right? It's just an exchange of value for product. And when they figure that out, which I'm sure there's millions of people out there already trying to figure that out, well, probably not millions, but tens of thousands of people, very smart people trying to figure that out. When they do, and they make it usable, there are no transaction fees, which is the point of blockchain. And it is supposed to be instantaneous. So can you imagine sending money from country to country? There is no currencies anymore. Everyone has, you can pay the same currency to people that are different citizens from different countries and jurisdictions. Like that is decentralized.
The EU.
Yeah.
A lot more complex reasons, but that's a fundamental reason, right?
That's right.
Ease of trade.
Yeah. So, I think, we go on some tangents here, but to loop that back.
Yeah, I'm Nicki Christensen. I'm here with Jackson Dean, and we've just discussed Bitcoin, investing in tech stocks, which is the hot tip over the next 10 or so years, having a medium-term view, in Jackson's opinion, and I would wholeheartedly agree on that. But, of course, seek your own independent financial legal advice. Yes, past performance is no guarantee of future performance, and if you're married and listening to that, you would know that better than most. Very clever. Well, Jackson, that's been an insightful hour that we've spent, depending on how this gets cut up. Yeah. I hope you've enjoyed that, listeners. If you have, please leave us a comment, send us a direct message on Instagram, hit us on our websites. Do whatever you can to let us know that you like it, and we'll keep producing more. If you've got any questions or you've got a suggestion for topics to talk about, please forward those through on any of the socials for both Jackson or myself. You can find that below where you're listening to this right now. That's beautiful, Nicki. Until next time, guys, have a great day. Bye for now.